Morning, everyone. Welcome to Ainsley News. It's Thursday, the 17th of March. Gold calls BS on the Fed, and policy mistakes are locked in. As we talked about yesterday, the US Fed last night raised rates by 0.25% to tackle rampant inflation. Big deal, right? However, markets reacted strongly because the same markets who've been pricing in 7 rate hikes this year were actually surprised when the Fed agreed. Yep, the Fed is now openly forecasting a rate hike at every one of its remaining 6 monthly meetings this year. Wow. Buy the rumour and sell the fact. Sure, shares, strangely, rip higher. The USD falling and the yield curve flattening like a pancake. Gold called BS on it all and it rallied. The problem locally is that the Aussie dollar rallied too and took all of those gold gains away, which is a bit tricky. First, for context. Got a picture in today showing 8% inflation with a 25 BPS rate hike in there. Doesn't seem to put that fire out. A little bit too little and too late. Policy mistakes everywhere here, folks. And there's nothing to see. In a classic yet well-trodden path of jawboning, it was a night of two halves. The release of the Fed minutes showed their intention of 7 hikes this year, and a Fed now belatedly calling both a surge in inflation, and they're dropping the term transitory, and a big drop in growth, aka stagflation. That saw everything drop, including gold, until, of course, Fed Chair Powell got the mic in the post-meeting press conference and talked up the strength of the economy, to be able to handle this, and bravely declaring the probability of recession is not particularly elevated. Maybe no one told him that the 5 out of 10 yield curve inverted. May we remind you that this is the same guy that called inflation transitory, justifying not raising rates earlier. Last night, he described this as a sudden, unexpected burst of inflation. Whilst he definitely didn't start it, he has done his very big part in printing over $8 trillion worth of new US dollars since the GFC. And apparently, this level of inflation was unexpected. Before the GFC and since the inception of the US Fed Reserve in 1913, they added just $800 billion to their balance sheet, so around $0.8 trillion in nearly a century. Since the GFC, in just 14 years, they've increased that over 10 times, and all with freshly printed US dollars. Now consider they only printed implemented quantitative easing, to use the less alarming phrase, for around 8 of those 14 years. In other words, they printed more money in each of those years than the entire century beforehand. Take a moment to digest that. What the yield curves and gold's action last night are screaming is the market is already factoring in that they will need to reverse action after killing the market and ease again. Coming back to the fact that the Aussie dollar, in gold terms, went down $22 last night, while US dollar spot went up $9, let's close with Macro Business Fund's chief strategist David Lewin-Smith's succinct summary here. I'll just read that for you now. It is now my base case that the global economy is late cycle in 2022, not 2023 or 2024. Recession on that cycle is on speed. US yields are already choking off the housing market, and the giant post-COVID inventory pile is quivering as oil shocks households. And China is worse. Domestic demand is falling away, chasing the property adjustment. Omicron cannot be beaten without constant lockdowns and material damage to output. An external demand shock looms. It is terrified to cut rates, lest CNY crashes. It will have no choice. Europe is stuffed by an energy shock and war. EMs are crushed by tightening Fed and loosening China. Yet the Fed is cornered by runaway inflation and will tighten aggressively into all of the above. Jay Powell is unequivocal in the presser. Rates are going to rise every meeting until he aligns demand with supply, and given the latter is falling, then the former must as well. An end-of-cycle shock is now the base case, and yes, it will hammer Australia in due course as asset price fails merge with a commodity price crash. Sell the rips, including the Aussie dollar, definitely not advice, but AUD price gold is looking very good indeed at the moment. Wow. Thanks for joining us today for everyone's news. Jump over to ainsleyBullion.com.au for all things physical, gold, silver and platinum, buy, sell and exchange. ainsleywealth.com.au for all things crypto, and goldsilverstandard.com for our own crypto built and backed by real gold and silver. We'll catch you tomorrow, everyone. Enjoy your day.